Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. And as you guys can see here on this 1 hour chart, Uncle Charles has that bear flag that I've mentioned in the last couple of videos. And we are still trading within this bear flag. And let me tell you, I believe it is going to end. It's going to break out or break down, but we're going to break from this range tomorrow with FOMC coming in at 2 o'clock, 2 p.m. Eastern tomorrow. Now, before we get to the price action, I love financial juice. Let's see what word in the Wall Street is saying, okay? What's the word on the Wall Street? Wall Street's favorite volatility gauge fell as the stock market's rebound deepened. I think they're talking about the VIX. With the surge in banks and assurance from global authorities allaying fears that the recent financial turmoil would lead to a full-fledged crisis. Okay? Global authorities allaying fears that the recent financial turmoil will lead to a full-fledged crisis. If you wonder what the hell, why did we gap up today? Well, the global authorities are trying to allay the fears, okay? In any case, the coordinated actions to resolve the banking turmoil have restored some semblance of order for the time being. The market's so-called fear gauge, or VIX, was on track for its biggest two-day drop since May. Traders are betting on another 25 basis point hike in the run-up to the Federal Reserve decision, with officials pushing ahead with the fight against inflation and signaling commitment to financial stability. So it sounds like the market is pricing in a 25 basis point hike tomorrow. Okay? And you guys, we got global authorities trying to allay the fears of the bank situation. Okay? So that's what Financial Juice says. Let's get to the price action. That is what the news says. We know we got FOMC tomorrow at 2 p.m. Watch out for that. 2 p.m. we got the data released, and 2:30 that's when Powell come and speak. Watch out for a potential reversal tomorrow, guys. All right? Identify your support and resistance level relative to where the price is at. Okay? And watch out for a reversal at 2:30 p.m. The false breakout and the false breakdown setups will be your best friend tomorrow, as I always tell you guys for these type of data days, especially FOMC. So do not try to call a top. Do not try to call a bottom. Okay? Be objective with the price action. Be disciplined and play the setups. All right? False breakdowns, false breakouts will be your best friend if you are the type of trader that likes to play reversals. Okay, those type of setups, the false breakouts and the false breakdowns, is a reversal traders or a counter trend traders best friend when it comes to trade setups. Does that make sense, guys? So please do not try to call a top or a bottom, because when the market moves on FOMC days, it really moves. If you go check on previous days, okay, you can go on investing.com, type in the FOMC, and you'll get the dates. Then you go to your charts, go check the dates. They are very volatile days where they move $10, $15 in a day, and even the day after FOMC is volatile. So I'm looking forward to the next couple of trading days. All right, but the levels, man, that I would love for you guys, and I hope for you guys to pay attention to, is the resistance of this bear flag. Okay, now if I move it to tomorrow, all right, to 2 p.m., the breakout of this bear flag is 402.24. All right, and the breakdown of the bear flag is at 391. Okay, for 2 p.m. tomorrow. That's the breakout at 42.2, and the breakdown is at 391. All right? So that's the two levels that I want you guys to pay attention to. Anything in between that is still within the bear flag. Okay, if we break out above, that's bullish, and I'm pretty sure FOMC will be the catalyst and give us enough volatility to be able to make a strong breakout. Okay, or at least I'm hoping. Of course, watch out for a false breakout. If we break above 42.24 and then intraday, you know, on a smaller time frame like 15, 30 minute, 1 hour or something, we break back below that level, that's a false breakout, so watch out for that. Okay, but if we break out above, that's bullish. Okay, now the next trend move, the bearish trend move, is if we break down 391, break down this bear flag, we get a trend move to the downside. We'll see a lot more downside if that happens. Okay, now the levels within the bear flag. All right, I got the critical 396.5 level. Hopefully you guys got this level already on your chart. All right, but if I go out, if I zoom out, let me move this bear flag. If I zoom out to the daily chart, okay, boom, the 396.5 level is the 50% fib level that I got from December low to February high. All right, we cleared that level today. If we break back below that level tomorrow, that will be bearish. Okay, false breakout setup. All right, if it happens after FOMC or before it, that's a false breakout setup if we break back below 306.5. So that's a critical support for tomorrow. And the next critical support is this yellow trend line. Okay, it's at 394.6. All right, 394.6 is based on this yellow trend line. You can see it tested as support 1, 2, 3 times, tested as resistant 1, 2, 3, 4 times. All right, so that's a very critical level. It's bullish as long as we are above that level. Bulls have a shot at more upside as long as we are above 394.6, okay, with 396.5 as the first level. Now, assuming we stay above these levels, the next critical level I'll be watching is 400, all right, 400, and then the critical 41.6 to 402 zone, okay? Remember, 41.6 is a 38.2 fib level, but 402.2-ish is the resistance of the bear flag. So above that level would be very, very bullish. All right, and the next level I'll definitely be watching is 405 based on this yellow trend line that I have here. Okay, now to be bearish, break back below 396.5 and 394.6. Break back below those levels. Can FOMC be the catalyst that the bears need to push it back down? Okay, because below these levels, I would look to short. I would be bearish. Look to short when support fails, guys. Look to short when support fails. All right, and if it does fail, and if you do look to short, I would be targeting 391.4 and 391.4. Also remember, the bear flag is at 391. Below 391 would be very bearish, and if that breaks down, I would either keep holding my puts or I would add to my puts, targeting lower downside 388.5. The yearly trend line for tomorrow is at 385.5. 384 is a 78.6 fib level. Below 384, if 384 fails, I'm going to favor a deeper sell-off. The previous low back on March 13 was at 380.65. That's a support level I'll be watching, but I will favor that it will not hold, okay? That's just what I'm favoring, but I will in real time adapt to whatever the price action chooses to do. Okay, guys, big day tomorrow. These blue lines that I have on the daily chart here, these are the last FOMC days, okay, that I got from investing.com. As you guys can see, these are very volatile days. We're talking $10+ moves intradays, all right? So there's going to be either lots of money to be made tomorrow or lots of money to be lost tomorrow. If you guys need help, please consider joining my Discord. I would love to be of service to you guys. But whether you choose to join my Discord or not, tomorrow is not the day to mess around and find out. Respect your stop losses. All right, false breakdown and false breakout setups will be your best friend if you are a counter trend trader. All right, and play it level to level. Do not let greed take control of you. And if you believe in the move, leave a runner. Let your runner catch the home run move. Risk management is #1 priority. So you guys got my levels, you got my setups. Let's play this unbiasedly. Bah! Now triple Q is pretty bullish, okay? It cleared that 307 level and 309 level, came a few cents shy of the 311 level that I have, okay? These are all previous highs that I have on previous trading days. So tomorrow 309 and 307 is support. If you're a bear, you want to see those levels break down. The critical Fibonacci level that I got is at 303.8. That's a 61.8 fib level. If that breaks down, I would swing puts targeting 301 and 297 based on this blue trend line, with 294.3 and 293 below. Look to short when support fails. Now, if the if triple Q manages to stay above 309 with 307 lowest, that avoids a false breakout setup. I just need to see 311 clear to put 313.6 and 317 in play, maybe even higher with FOMC as the catalyst. Maybe. Now here's IWM lingering around that 61.8 fib level at 176.5. That's the equilibrium tomorrow for IWM. Above, bullish. Below, bearish, okay? If it's above 176.5 tomorrow, look to long when it clears the next resistance at 178, targeting 181 and 185-ish, okay? Now, if it's below 176.5, look to short at the next support at 174.4, targeting 170 to 171 zone with 168 below, all right? Tesla, look where Tesla closed today. No coincidence. Gave us the third touch of my pink trend line here. So for a breakout, for official breakout tomorrow, it needs to get above 197. Needs to stay above 197 and clear some resistance starting with, I got here at 204 and 207.5 and a resistance at 211 to 211.5 zone, okay? If it's unable to get above 197, all right, and it rejects from there, I will trust the rejection if it takes out support starting with 194 and 190. Below 190, I would swing puts, okay? There's a gap around 183, and then the critical Fibonacci level at 175.6, 173.4, and there's another support at 168.5. All right, guys. Apple still showing some follow through after it broke out of a critical resistant level. All right, so there's support at 157.5 and 156.2 below. All right, Apple's coming a few cents shy of the 61.8 fib level that I got for Apple. All right, on the daily chart. If you're gonna try a short, 160.5 is worth a shot, but if it clears that level, I will cut loss. Okay, other than that, wait for support to break down if you're gonna look to short Apple. All right, if no support breaks down and Apple clears 160.5, definitely look to long with 165 as my ultimate target. Okay, so yeah, below 157.5, we'll put 156.2 in play. Below that, that's when I will be a lot more bearish, putting 153.5, 150 and 147.5-ish in play. All right, now let's take a look at some inverses, guys. DXY, I've been telling you guys, DXY been showing us bearish price action, and you know it's starting to reflect a little bit on the SPY after that little gap up it had today. But still gotta watch the price action because there's resistance at 103.4. If 103.4 and 104.1 recaptures, that is bullish. Okay, that's why we gotta pay attention to the context as much as we can, because it's always changing and we got to be willing to change with it. That's what being a sheep style trader is all about. So above 104.1 would be bullish on the DXY and could be bearish for the SPY. Now here is the VIX. Look at that drop. Amazing. Two big red big body candles back to back like that. Now 21.2 is the next critical support. If VIX can break that support down, then the bearishness continues and the bullishness for SPY continues. If it bounces here, I will trust the bounce if it clears resistance starting with 23.8. If VIX starts getting bullish, that could be bearish for the SPY. All right, now let's take a look at the option flow ahead of FOMC. Okay, 66% in the calls. Now look at this one. I don't know who it is. for March 22nd for tomorrow, 406 strike price. They may have sold already, but they entered around 397. Okay, they entered around 397. They must have got the end of day breakout. All right, but 406 strike price, expiration date tomorrow. All right, but overall 66% for calls. All right, a lot of these dates are coming in for April. Okay, triple Q, let's see, triple Q, 67% in the puts. Look at this one, 290 strike price for April 21st, so it has time on it. All right, very bearish play right there. They entered around 309.9ish. Okay, IWM is 96%. So big money has been very bearish on IWM lately. 170 strike price, pretty aggressive play for this one. 1.4 million in premium sweeps. This one's 158 strike price for April 21st. Okay, 170 strike price for April 21st. Okay, very aggressive for April. Puts for April. Tesla, 57% in the calls for Tesla, at least for today. Okay, and Apple, 71% puts. Nothing that really sticks out to me. And VIX, 96% in the calls. All right, guys, thank you guys so much for watching. If you want more content from Uncle Charles, please consider joining my Discord. Other than that, thank you guys. Peace.